Let's take a look at how to invest your first $500. So I have my handy list of portfolios with me, both $500 and $1,000, broken out between aggressive and conservative. The first one we will look at is the aggressive $500 portfolio. Now, when I say aggressive, I'm talking about how risky and how risk averse are you when it comes to investing, because the more riskier investments are going to be stocks. Fixed income assets such as bonds are going to bring stability to your portfolio. So in a bull market, everything is looking great, stocks are shooting up. But in a bear market, stocks are dipping down, and your bond, your fixed income assets, that will provide stability to your portfolio. The first thing that you want to pay attention to when it comes to your $500 aggressive portfolio is the VOO ETF, which is the Vanguard 500 Index Fund ETF. You want to buy one of them. Currently, it's priced at 366. And the Vanguard S&P 500 is a index of the 500 biggest companies in the US. The next one you want to look at is the VX US, which currently is only about $52. You only want to buy one share of that ETF also. The VX US is the Vanguard Total International Stock Index Fund ETF. And since this is a total international ETF, you're also capturing high quality companies outside of the US. The last ETF that you want to have in your $500 aggressive portfolio is the BND ETF, which stands for the Vanguard Total Bond Market Index Fund ETF. Now look at this. So we have the 366 for the VOO, $52 for VXUS, which is the International Stock Index Fund ETF. And then you have $72, which is what one share of BND costs right now. If you break it out by how risky your portfolio is, your fixed income assets, which is the BND, is 15% of your portfolio. Now, the other 85% consists of stocks, both the S&P 500 stocks and then also the international stocks. So with the S&P 500 ETF, and then also the VXUS, which is the total international ETF, you have that immediate diversification in high quality companies. And then with the BND, you have that fixed income asset that provides stability to your portfolio. Now, this is an aggressive portfolio because only 15% of your portfolio is in a stable fixed income asset, which is the BND. And if you add up all these three ETFs, you'll pay about $490. So you still have $10 left to buy a fraction of a share, or you can also invest it into crypto. If we move over to the conservative $500 portfolio, we're going to make some slight changes. So we're going to keep the VOO, that's the foundation of your portfolio, and we're going to buy two BND shares, which will bring your fixed income assets to 28% and your stocks to 72%. If you add this all up, you get a little over 500 bucks, you get $510. The reason why this is more on the conservative side is because you have 28% of your portfolio in a fixed income asset. The way to think about fixed income assets, I like to use the John Bogle method. This method says that whatever your age is needs to be your percentage in fixed income assets such as bonds, certificates of deposits, savings accounts, etc. So when we look at the bonds, I'm going to take 30 years as the average. I'm assuming that we are all 30 years. Now, depending on how risk averse or how risky you want to get with your investing, you don't need to put 30% in bonds. You can go even less or even a little bit more. So let's say you are 30, but you only want to have 20% in fixed income assets. Just tailor your portfolio to hit that correct percentage. Now, like you have already noticed with the conservative portfolio, we got rid of the total international ETF.